Great evening, everyone. If you're watching this on replay, great morning, afternoon, whenever you decide to watch it. For those who don't know me, my name is Sonic Jones. I am privileged to be hosting a call tonight for our health and wellness squad, man. Really, just to teach you guys about the importance of owning a home-based business and really perfecting what we call your tax strategy. The gentleman that I'm about to bring on, I'm going to have him take over the call. But just to let you know a little bit about him, man, I've known this gentleman for many, many years. We go back. He's been doing taxes for well over 20 years. Now, we don't call him a tax preparer. He's a tax professional, tax strategist. This is the gentleman that teaches people about different strategies. As you can see on the screen, it's the big question: what's your tax strategy? Most people don't have one. And so it's my honor and pleasure to bring on a gentleman, like I said, I have a lot of respect for. I've seen him do some amazing things in this industry. And so without further ado, Mr. Rodney Lamb, are you there and available, sir?
I'm here, sir. Wouldn't miss it, wouldn't miss it. How you doing this evening?
Man, I'm wonderful. I'm blessed to have you on, man. I appreciate you reaching out and asking, can we get some people on just to educate them? So, man, the floor is yours. I appreciate you, sir.
Definitely, definitely. I just want to say first and foremost, thank everyone. I want to thank everyone personally that got on tonight. That gives you an opportunity to get better in your business. And that's what my goal is, to help your business do better. And so many people don't realize when it comes to taxes that you can even have a tax strategy. Taxes is a once a year service that usually takes minutes. And so, how can you strategize for something that happens once a year and usually takes minutes? And so, it requires a lot of information. And so, you cannot strategize for a thing that you do not know. And so, I always like to share with people that you cannot rise higher than the information you possess. You only know what you know. And so, I definitely want to make sure that I share some information with you this evening that's going to increase your knowledge. And my goal is that when you know better, you do better. And so let's get right into it. I definitely want to make sure that I respect everyone's time. Let's talk about the legalities. Truth Induced is not associated with any company, nor was Truth Induced endorsed, paid, or compensated any financial income to share the factual information within this presentation by another financial company. Truth Induced does not guarantee any strategy shown in this presentation, nor does Truth Induced participate in their advice through presentation with the intent to entice, persuade, or manipulate any individual toward a decision. And I put a little extra disclaimer in here because I want you to understand this is not a tax loop, a tax shelter, or a tax scheme. The information shared in this presentation are tax law and tax code that are legally allowable to business owners with proper documentation. And so I want you to rhetorically think of this question. And we've all coming from somewhere different today. And so I kind of want to bring us into the frame of mind that I want us in with this question. And I want you to ask yourself, what's the difference between the rich, the poor, and the middle class? Now, normally I would pick on somebody, but for the sake of time, I just want to share mine with you. You know what the poor do? They just buy stuff and they buy stuff and they buy stuff. Nothing never comes in, yet and still they can continue to buy stuff. And the middle class purchase liabilities and assume that the asset, the new house, the new car, but they didn't tell you that they're building a mountain of debt in the background. And if you didn't know, I'd like to share with you that credit is debt. But what do the rich do? They don't just buy things. What the rich do is they buy assets. And if you would, Google the word assets for me, because you're going to see that there's actually a list for the word asset. But what I really want you to do is look on that list and see how many things you own on that list. And so when people ask me what's the difference between the rich, the poor, and the middle class, I've always shared with them it's about what they know and what they buy. Let's go over rich thinking. The rich purchase things that's going to do three things for them. It's going to create a passive income that'll create a cash flow of residual income. This is what the rich buy when they spend their money. I want you to think about the last thing you bought. Did it create a passive income that eventually created a cash flow of residual income? Think about that. But Robert Kiyosaki said vocabulary won't make you rich. but a lack of financial knowledge is worse than being broke. And so I just want to share the definition so that we're all on the same page. Passive income for the purpose of this presentation is income being taxed at the lowest rate. They buy something that's going to be taxed at the lowest rate. Cash flow is money going in your company account and being spent from that very same account. And if you'll notice, I said company account, not a personal account, so tied into your social security number. And then residual income is just money made with no effort, slow and for sure. This is what the rich purchase. And so my question to you is, who can be rich? And if everyone is answering correctly, everyone said anybody can be rich. Then if anybody, why not you? Usually when I do this, very few people place themselves in the rich category. And I ask them all the time, why not? When see, we understand that there's 3 financial phases to your lifespan. And so we want you to understand your first one is your accumulation phase. This is where we make all the money we can make so that we can go into conservation. This is where you live off of your strategy. This is where a lot of people are in accumulation headed into the conservation. And then distribution, ladies and gentlemen, a lot of people don't even consider this day. And this is after the day you leave this earth. People don't plan for this day, but you have to plan because this is the day you'll be taxed the most. And so what's plaguing our country right now is the lack of financial literacy. And see, people need to understand financial literacy. If you don't have this information, you could easily fall victim to consumerism, and that's impulsive spending. So many people have this sickness right now. And then you have indebtedness. Right now in this country, you can borrow money and not have any money coming in. And so they are creating a country of citizens of debt. And of course, the very last one is excessive taxation. I want everyone to know on this call, you're being taxed at an excessive rate that you don't understand. And so I just want to share with you this evening how not to pay too much taxes. But you really have to look at it. And I pose this question all the time when I go across the country with this presentation. What's the greatest expense you'll incur in your entire lifetime? And when I pose that question, I want you to think about something you spend your money on. And across the country, I get these 3 answers: a home, children, and education. And the reason being because these are the real bills in your life. What I want people to understand, if you didn't know, taxes is the greatest expense you'll ever incur in your entire lifetime as an American tax-paying citizen. You see, before you were born, taxes were being paid on you. When you breathed your first air, taxes were being paid in the hospital. But did you know, ladies and gentlemen, that after you die, you have to file your taxes one more time? Even when you're dead, you owe taxes in America. So we want you to understand the greatest expense that you'll have in your entire lifetime is taxes. And so we want to teach you some legal ways to lower that tax liability. And see, you have to consider all of these things when we speak on this topic. I want you to consider you and what it costs for your transportation, your food, your clothing, your housing. I want you to add them all up. And you don't realize that your taxes exceed all of those combined. You're paying so much in taxes you just don't realize. Let me give you a list of just a few taxes that you're paying as an American. And a lot of people don't realize that they're paying these taxes. Every single one is not being taxed to you, but at least 8 to 10 of them are. And the main one is that local income tax. I want everyone to understand every time you buy something in your city or state, you're being taxed. And so this is what I mean when I ask the question, what's your tax strategy? And when I ask that question, what I mean specifically is, what do you do to lower your tax liability? If we're being taxed at this excessive rate, what's your strategy? And if you don't have one, I'd like to share one. And so, but I want to talk to you about the 2 tax systems, one for employees and one for business owners. As an employee, you're being taxed up to 12 times. There are a few deductions you allow. You're limited to certain schedules. Earning actually hurts your tax bracket. You're taxed on your income before you even receive it. And yes, they will give you a retirement date after 20 years of work. As a business owner, you're taxed after business expenses. Over 500 deductions you qualify for. You can use all schedules. Earning is actually encouraged. Earnings are offset by your expenses, and your success date is whatever day you deem yourself to retire. And so we want you to understand which option is best. If I was asking this to the room, I'm sure everybody would point to the business owner. Well, then explain to me why 80% of our country chose to be employees. You heard just like Rodney heard, go to school, get good grades, and get a good job. And so many of our country has followed this pattern. And so we want to get this information to prove and show people that as employees, this is your goal. See, a lot of people have this reality right now and they have a job on this call. And nothing wrong with that because as an employee, you want to lower your tax liability. Can I be taxed just 6 times, Rodney, instead of 12? And as business owners, we're just looking for more deductions. What else can I write off, Rodney? And this is why I believe the home-based business is the best tax strategy ever. Because if this is your situation as an employee, not only are you lowering your tax liability, but at the same time, you just increased deductions that you may not have known about. And so definitely want to say, who am I? My name is Rodney K. Lamb, 22 years in the tax industry. 16 of those years I've been a pro. 15 now, I've been the firm owner. My education stemmed from a Bachelor of Science in Humanities and a minor in Business Management. But my tax credentials stem from TaxWise University, SFS University. I'm a member of the National Association of Tax Professionals. I'm PTIN certified, meaning I can do your taxes for a profit. But I think it's more important that you know I'm the Ethan holder, meaning that I own the firm and not just work for it. A few accolades I'm proud of right now for a few years now. I've been the #1 reviewed tax pro in the country, according to PTIN.org. This is where our clients give us reviews for good services. And so we're very proud of these accolades. A few years ago, I was able to join this organization, the American Tax Problem Solvers, which allowed me to put designation behind my name. And so now I'm a CTRS, which is a certified tax resolution specialist. So no longer am I a tax professional, I'm now a tax specialist. And I'm proud of these accolades. But the one I'm most proud of is going on 15 years now, we've had an A plus with the BBB with zero financial complaints. We have clients in 32 states, and they said that's phenomenal to have clients in that many states and no one complained. And we shared what I'm gonna share with you, ladies and gentlemen, is that good news travels just as fast as bad news. And so we're just proud that the good news has reached you this evening. And so 3 things I really stress about taxes is having a tax goal. The one thing I tell every client is that you cannot hit a goal that you haven't set. And so the first thing we need to do is set some goals. But a lot of times we don't believe we can even set goals when it comes to taxes. And what I mean by that is the habits and behaviors that you intend to change to achieve that goal. There are some things we're going to have to change first and foremost, like paying in some taxes. You have to come with a tax strategy. These are the methods applies to manifest that goal. You have to make sure that you have methods that you intend to do to manifest this goal. And then you have to have a tax target. That's the amount desired based on your ability to aim. You cannot want a $10,000 return if you haven't paid $1 of taxes in. And so we want you to realistically look at your tax return and put a real tax target based on your ability to aim, which is usually based on your real statistics. And you have to look at everyone individually. And when you do this, ladies and gentlemen, this is how you get a refund by design. Taxes are not an accident. You can plan the result. You don't have to go in and just throw everything down and hope that you get a refund. You can almost know exactly what your refund should be or around. And so we stress that to everyone. The problem to me is that many people have a business and they have no business plan. But when I grew up, you used to have a plan before you had a business. And so we teach people just to slow down and come back to step one and put a business plan together. That's the solution. Again, here's the second problem. A business plan can get very extensive. And today specifically, we'll be talking about the financial aspect, the financial planning aspect of a business plan. Even though, as you can see, it can get very, very expansive when you go into your business plan. But when you look at this, the first thing I ask business owners for me to do is define the word business. This will help you understand what your motive is. What should you be doing? And as a definition, business is the activity of exchange with money or barter for goods or services. What I want you to leave from this slide with is the activity of exchange. If there is no activity of exchange, ladies and gentlemen, there's no business going on. And so I always encourage my business owners to at least exchange information. Most of y'all are product based. And when you're product based, you really have to make sure that you're exchanging information for that product. And this is a great way to prove and show that you are in the activity of exchange or doing business. If you're already in the act of selling wellness products and services, then that wellness activity should be your business. This is what I want y'all to understand. What's the name of your company? And we need to make sure that y'all understand that y'all are wellness consultants. A lot of people ask me, what should I call myself, Rodney? Well, you're a wellness consultant because you sell wellness products. So now what's the name of your company? And once you understand that, you will register everything. And so once you get registered, people ask, what am I liable for? What are the liabilities as a business owner? Well, you have to look at, normally you file federal taxes and state taxes if you're in a state that charge. And then if you sell products and charge taxes for it, then you register with the state comptroller. And if you're LLC or above, then you have a franchise tax. And if you have any employees, then you have a payroll taxes that you're responsible for. So in essence, a business owner could easily be responsible for filing taxes 9 times instead of the one time that you're normally used to, or the 2 times. And so it's important that you understand, what are my tax liabilities as a business owner? What is my entity structure? And these things are important. I want to go over a few quotes so we can really embrace what my goal is this evening. A tax is compulsory payment for which no specific benefit is received. This is the U.S. Treasury opinion of a tax. And I want you to focus on 2 words in that statement: compulsory payment. And why are we using words like compulsory in the land of the free? The truth is that we have such a limited budget, such limited manpower to enforce the income tax laws and collect the revenue, that the only way we can keep them afraid, honest, and paying their taxes is to keep them afraid. And this is the former commissioner of the IRS. The IRS actually applies fear tactic so that you will pay taxes. And this is my favorite. You get a raise every time you can legitimately avoid paying a tax on something. 2 words I want you to focus on here is legitimately avoid, because I'm not here to tell you this evening to evade taxes. Tax evasion is illegal. They have several celebrity examples to prove that you cannot evade taxes. But did you know that tax avoidance is not illegal? These laws have been written 106 years, ladies and gentlemen, and they have written laws to teach you and me how to avoid paying a tax. I don't think anyone on this call is 106 years old. And so you'll have an opportunity to see these laws that have been around for hundreds of years that we just didn't know about. And this is what I mean when I say you cannot rise higher than the information you possess. But what's sad, what if your tax professional doesn't know? Then you really lose. And so we want you to make sure that you have the information so that you could demand a better preparation. And so when you look at the screen, you would have your everyday expenses as wellness consultants. And we want you to understand, normally you will say, this is my entire life, Rodney. But what I want you to notice is that each one of those yellow slips represent a category. And so these are just categories, actually 9. And so actually 9 deductions. But did you know there are 491 more deductions not on this screen that you qualify for? And so we need to make sure we have a conversation, because if you look at the screen, you would think this is your entire life. But I can show you there are things that you qualify for that you just didn't know about. And so one thing I teach business owners, especially when you're sales based and product based, is work in and on your business. You need to realize that there's a duality to you. What you do in the business should not define you as the business. You should know that. So when I say work on your business, what I mean is you should be goal setting, visualizing. This is where you do your marketing, your productions. This is where you're tracking your profits and losses. This is where you create a system. And if you have contractors and or employees, make sure you cover that information there as well. Now, working on your business, this is you actually buying product. This is day-to-day operation, getting out there sampling. This is selling. You got to make sure those samples lead to sales. This is analyzing the area. You see, you want to make sure that you're just not out there. You want to make sure that you're going out there with purpose and definitely never stop learning. You never stop learning. You never stop learning. And once you realize this is a duality, and once you learn how to work on your business and in your business, then you will create a system that's going to produce profits. And so we definitely want you to make sure that you understand there's a duality to you. Because see, right now, if you haven't registered your business, you're just a taxpayer. And it's viewed as personal and nothing is tax deductible. And see, if you're a wellness consultant, then everything is viewed as business. Your local travel, you don't realize we're earning 63.5 cents a mile. You're literally getting paid to drive. But are you writing down your miles? Are you taking advantage of being a wellness consultant? All related expenses are tax deductible. And so, what would you rather file your taxes as? A regular taxpayer or the wellness consultant that everyone is? And so, I definitely want you to file yourself in the name of business, not in the name of you. Remember this quote: I can write everything off in the name of business and nothing in the name of you. And so we want to make sure that you always stay in a name of business mode. There are over 500 plus deductions that you qualify for, ladies and gentlemen. Your duty is to unlock them all, everything that qualifies for you. And so there's so many deductions. Every single one of them won't qualify for you or your type of business. But everything that does, you want to make sure that you revolve your personal life as much as you can around those business habits. Structure your life around there. And this is how we transition your life in the name of business. And that's what the goal is. The goal is to transition your everyday expenses and the tax deductible expenses legally. And I stress legally, ladies and gentlemen, because none of this is Rodney's opinion. You see, the great thing about my information is that it's all written, it's all law. You see, in my industry, there are no gray areas. If someone says you can do something, it's written. If someone says you can't do something, it's written. And so, from a specialist, I would like you to say if you hear any tax information going forward, just ask him to show you because you talked to a specialist and he said you should be able to show me that. Either way, whether you can or you can't, it's just very few people tell you what you can do. They always tell you what you can't do. So just remember to tell them to show you. Let's talk about a red flag. What is a red flag? A red flag is a tax deduction, a tax credit that bounces your return out the computer and invites an IRS auditor. And so, if you have not committed one of these four violations, ladies and gentlemen, you should not hear the words red flag from your professional's mouth. In fact, I want to share with you that if you do hear the words red flag, then that's just code for I don't know how to do your taxes. And just like the IRS, they're going to lose you with tax jargon and fear tactics. And you'll say, you know what, let's just leave it alone. I don't want to raise any red flags. When if you haven't used expenses or credits not associated with your business, you shouldn't hear it. Lavish or extravagant items, large deductions, or abusive use of deductions. If you have not committed one of these four violations, ladies and gentlemen, you should not hear the words red flag. And so, what is an audit? An audit is the IRS looking to prove that the information on the return is accurate, the deduction is legal, and that the income is honestly stated. And by definition, this is not a bad thing. But there's a stigma in the country, and so many people are afraid of the word audit that the IRS no longer does audits. The procedure is now called conducting examinations. And why the euphemism? Because they don't believe we will understand that this is the same process. It just changed names. So if you receive a letter saying they're going to conduct an examination, it's really just saying you're being audited and they hope you show up. And so let me give you some percentages so you can see the real statistics about audits. If you happen to make under 25,000, there's a 1.2% chance that you'll be audited. 25 and 100,000, 2.5, 100 to 200,000, 4.7, and 200,000 and up, just a 3.3% chance. And that's amongst 80 million business owners in the country right now. And so I concluded that audit is only a bad thing unless you're lying. So if you're not lying, ladies and gentlemen, then why are we afraid of an audit? Because one thing's for certain, you really did put gas in that vehicle. And so we're going to really write it off. You really did pay your light bill. So we're going to really write it off. You really did pay your rent or your mortgage. So we're going to really write it off in the name of business, not in the name of you. Let's look at another fact of fiction. After 3 to 5 years, usually, of taking a business loss, the IRS is going to audit you. Fiction. I want you to know, ladies and gentlemen, you can actually take a business loss 22 years, and that's consecutively. You have 22 years to record a business loss. And so we want you to understand these methods and these rumors that you hear in the name of business are not really true. All of these things about people getting in trouble putting home-based business on their taxes is really not true. And so we really want to make sure. If you're an employee, we definitely want to make sure that we share with you on filing taxes. I still believe that paying in taxes is the most guaranteed method. And I always suggest single and zero. And single and zero, no matter what your situation is, this determines how much taxes you pay. And so I always suggested 8 months at single and zero, and then 4 months, you can choose whatever you want. And this is the normal throughout the year. It doesn't have to be consecutive. Now, I'm not suggesting that you place yourself in any financial situation for a better tax refund, but withholdings are the most guaranteed method to increase your tax refund if you are an employee. I tell everybody it's an income tax refund. You pay income, you make income, you pay taxes, then you get a refund. You cannot make income, pay no taxes, and expect a refund. And so that's just how the formula works. The IRS has two rules: spend it or give it to them. And of course, everyone on this call would rather spend it than give it to the IRS. And so, did you know that 80% of Congress owns a home-based business? What that means, ladies and gentlemen, is that they literally write law for themselves. But did you know if you own a home-based business, then they write law for you as well? And so, according to Congress, not Rodney, any taxpayer who runs a legitimate home-based business, whether part-time, full-time, or spare time, because we always know somebody who doesn't have time for your business, you only need to meet two requirements. One is that you run the business on a regular and consistent basis. That's 10 hours a week to qualify. Ladies and gentlemen, I don't know if you know, but there are 168 hours in the week. I'm sure you can find 10 of them to dedicate towards your business so that you can qualify. The second one is that you run the business with the intent to make a profit. In my 22 years, I've yet to meet a business owner that didn't intend to make a profit in business. Check. However, in my industry, intent translates to proof and documentation. You can't keep it in your mind. You definitely can't explain it. You have to have it written down. And usually that proof and documentation is in the form of a business plan. And so I encourage everybody. And this is why I truly believe that the home-based business is the best tax strategy ever. Because these two requirements are the only thing you need in order to qualify and transition your life into tax deductions legally. And so when you understand that, what are credits and deductions? Well, let's talk about a deduction. A deduction is an expense associated with your business that qualifies for a deduction. What that means is truckers and travel agents get similar deductions, but not the same. Every business gets deductions according to the business code, and health and wellness has a code, and your deductions will be according to that. Let me show you how the deductions work. If you're in a $40,000 earner and you're in the 15% bracket, that means you roughly owe the IRS $6,000. And let's say you drove $1,000 worth of gas so far this year. Well, we're going to write that $1,000 off as a tax deduction. What they're going to do is take that 1,000 from your AGI, and as you can see, we have a new AGI of 39,000. They're going to multiply it by your bracket, and as you can see, your tax liability went down from gas you already used or spent. And so that was just 1,000. What if we use 30,000 of deductions or 25,000? It would make that 6,000 go to zero. And if you were paying in some taxes or receiving a refund, it would go on top of what you would already receiving. And so that's how deductions work in your favor. But what about credits? Credits and tax breaks meant to stimulate the economy. What that means is they go and they come. Every year they change, usually after the fiscal cliffs. And so, but how credits work for your favor, I'm sure everyone on this call has light bulbs at home. Did you know if you just changed 4 of those light bulbs, you will qualify for the energy efficient credit and get $1,000 deduction on your taxes just for changing 4 of those light bulbs? And I think it's like $25 for the energy efficient bulbs. And so I asked that because that went away last year. Now they want energy efficient products and tankless water heaters. And so look up and see what tax credits you qualify for. Because look how the credit works. It comes directly from the liability. So instead of owing 6,000, you now owe 5. And so this is how we use credits and deductions to really lower a tax liability or increase a tax return tremendously legally. And see, as you can see, credits are more valuable, but those deductions are written in stone. They don't change. And so my job is to teach you how to revolve your entire life around these deductions. And every year, you and I find credits that fit you and that we can use. And so what about my people who own their home? And so you already filing on a Schedule A or Schedule C. Schedule A is like itemizing, but it's like getting 3% of your money back. And the Schedule C is the business deductions. And that's like getting 60% of your money back. Which is best? Both. You see, as a business owner, you receive this double deduction. Not only do you get to write it off on the Schedule A for a mortgage interest deduction, but you also get an 8829 deduction on the Schedule C. And so, ladies and gentlemen, this is an opportunity to pay Chase 25,000 once and get a $50,000 deduction for it. And it could really change the tax liability for something that you have to do anyway. And so take advantage of the double deduction, business owners. So many great deductions that you can get from a home. What about meals and entertainment? I heard many of y'all speaking about the meals and going out. Do you know right now the IRS is paying 100% to the business owners in the meal deduction? 100% of your meal deductions are coming back right now. All you have to do, and their goal and what they're saying is they want us to stimulate the economy, business owners. And so I encourage you all to go out and try something new. See the new restaurant and post it on your page, the free Facebook page that you can set up so that you can write it off in the name of business. But if you have a meal as a part of a training or a marketing presentation, 100% tax deductible. This is where we encourage the home-based business owners to put the home back in home base. You should be doing parties, trainings at your home so that we can write the meals off at least in the name of business. What are operational expenses for a wellness consultant? Well, we want you to understand that you can change your uniform up to 5 times per quarter, and that's shoes and outfit uniform. And so that's 20 outfits and 20 pair of shoes, ladies and gentlemen. What's your uniform? You see, I like to tell everybody, Rodney, wear Gucci. That's what I choose to wear for my uniform. No one can tell you what to choose. So we write the entire fall line out. We write the spring line out. We continue to buy uniforms in the name of business, not in the name of you. And so I encourage you, wellness consultants, to pick out uniforms that fit your type of business. Whose phone or equipment is that? It's not yours. It belongs to the company. But me and the IRS know that that account is in your social security number. But did you know you can call your phone provider for free and give them a free EIN number and they would transition that from your personal into the business name, and then you can write the entire 100% of the cell phone bill off in the name of business. This is strategy, ladies and gentlemen. Switch it over. It's a free phone call with a free EIN to get you a 100% deduction on the cell phone that you're going to use anyway. Ladies and gentlemen, getting your hair is called business image maintenance. You have to look good for your company. And so please know, ladies, getting your hair done is tax deductions. Gentlemen, haircuts, tax deductions. Write that off. Entertainment. I encourage y'all all to speak about your business everywhere you go. Always stay in a prospecting and marketing mode. And this will allow you to get many entertainment, not all, but many of the entertainment can be a deduction if you can prove consistency. But one thing you can prove is a gift. Every year you see Oprah give away around December. You never see a giveaway in March. It doesn't have a spring giveaway, only a Christmas giveaway. Because after Christmas is tax season. And so all the wealthy become philanthropic after Christmas. And so I encourage you, did you write your Christmas off this year? And see, I want you to take your name off the gift and put your business card on the gift. You see, and even business gifts only get you $25, ladies and gentlemen. But marketing and promotional items get you 100%. You think Oprah just get $25 when she give a house away? Of course not. She gives you that in hopes that you'll stay marketing and promoting her business. And what do people do? They leave it on their own channel. They buy her cups. They buy her magazines. They make Oprah richer while she lowers her tax liability. Ladies and gentlemen, that is not an Oprah rule. That is a business owner rule. And you have the opportunity to do the same thing. Meals, we just spoke about that. Every time you have a meal, the waiter is the one prospect you can talk to. So every meal should be in the name of business, not in the name of you. And of course, all of these expenses should be incurred in a business account, not in a personal account. And this is how the IRS separates everything. No comminglings of the funds. Four elements you must prove to satisfy the IRS test: time, amount, place, and most of these can be easily found out on the receipt. But the one thing you cannot find, ladies and gentlemen, is the business purpose. And this is your business reason for travel or whatever it is, the nature of business benefit derived or expected to be derived. And that business purpose is very important and you must document it. It's not going to be documented. So you have to keep a weekly log. And that weekly log will show the IRS that you are operating consistently and regularly in the name of business. Now, with the gifts, there's five pieces of information that the IRS will require. That's the cost, date, description, purpose, and the relationship of the individual. And so let's talk about some business purpose examples. For a gift, to maintain collegiate relationship for future business consulting and ideas. That's a great reason and business purpose for a gift. How about to stimulate referrals and maintain referral relationships? These are great reasons to give samples and gifts, ladies and gentlemen. How about to maintain the customer relationship for future business and move the customer toward the ideal of referrals? This is why I gave those wellness products away so that they can understand as a gift to maintain future business and get the customer toward the ideal of referring. And so you want all your moves to be calculated in the name of business. Now, how do you make that home a place of business? The IRS say in order to deduct the home use of your business use of your home, you must carry a bona fide business. By bona fide, they mean the business part of your home must be exclusive, regular, and for your trade or business. And when I saw this law, I was surprised because it has to be a principal place of business. Check, it's your home. A place where you meet and deal with customers in a normal course of trade or business. Check. And a central structure you use in connection with your trade or business. Check. And so in English, we want you to understand number three just means the biggest room in your home. And usually it's the living room. And we tell people, why would we choose? We get the tax advantages based on the square footage. So we don't pick the smallest room, we pick the largest room. And usually the living room has a couch. And Rodney likes to call that office furniture. and you'll have a TV, and we like to call that a business monitor. And I'm sure you have some plants and some more office decor that we can write off in the name of business in your separate structure that you use in connection with your trade or business. And so, ladies and gentlemen, we want to teach you legally how to write off what you already have. And so when you look at the home deductions, it's so many things that you can write off, even your cleaning supplies. We want you to understand that's not yours. That place of business must remain clean during the normal course of business hours. And so the things and supplies that's required to clean it are tax deductible in the name of business. And so this is just a great way to keep more of your money. We tell everybody, anybody can earn, anybody can spend, but who keeps the most, that's the real winner. And so this is a great way to keep yours. In your business, is 6 basic inventory management that we're going to suggest. And so when you look at number 1, and that's turnover, you want to track number of times your inventory turns over monthly. This is the information you should be tracking if you're not. Hopefully your back office has a lot of this, but we want to make sure that you have this number in your mind. Excess prevention, how to prevent excess inventory. And my suggestion to all you business owners is to sample. And so, you don't sample inventory that's fresh. You want to sample inventory that's towards the close to the end of the month. That way you can keep a fresh inventory all the time. And this is how you keep your excess prevention. And then you want to make sure you're tracking or get a good tracking system to make sure that you have the necessary inventory to meet your sales goals. And yes, you have to have sales goals, ladies and gentlemen. If you didn't know, you are the sales department for your company. If you're not selling, no money is coming in. And so if you don't set a goal, you're not going to hit that goal. And so if we set some sales goals, we can get the money rolling in and let's start tracking it. Your suppliers, we know where we order all our supplies. So that's a great one and easy. And that's what our goal is. Once we become a business owner, we make our supplier a vendor. And so this is a great way for you to use those products and services to further your business. Logistics. You have to look at what does it cost to get all of these products and services to the individual, to the customer. And you have to look at shipping if you're shipping, handling if you are, taxes, and then roll our fees back into the customer. And then you can have an actual price for your product. If you're doing those, some people just take it. And then all of this, ladies and gentlemen, as you can see, helps you create a system. And these are the methods for counting inventory. You have to create a system that you are comfortable with so that we can really track this information. And that's my opinion of the 6 basics of your inventory management so that y'all can be more successful and get to your goals faster. Now, if you haven't had a 15-letter word into your reality, I want to share this word with you. Contemporaneous. This is what the IRS is using to get all business owners right now. What they're doing is saying that your support records must be created and documented at the same time you claim the deduction. If you did not have a receipt at the time you're writing it off or a proof of purchase, contemporaneous, this is what they're saying. You don't get the deduction. They're going to deny it because you have no proof. And so one of the most missed deductions that they do is mileage. I want you to look on the side of the road. You're literally driving by thousands of miles every day, thousands of dollars, because people forget to document. And so here's an acronym I want you to remember: MAPS. And M stands for marketing, A stands for advertising, P stands for prospecting, and S stands for sales. And so you want to always be mapping. You always want to stay, because every time you leave home, it could potentially be for business. So you going to church? No, I'm going marketing, advertising, prospecting, or selling. You going to the grocery store? No, I'm going marketing, advertising, prospecting, or selling. It's all about how you document, ladies and gentlemen. So always be mapping every time you leave home. One thing I want you to realize about mapping: all of these equal costs, ladies and gentlemen. It's only one thing out of all of these that's going to equal profits, and that's sales. So always remember to ask for the order, stay in the mode of sales so that the profits can come in and hit your goals. Look at the mileage rate for 2022. When we're getting 58.5, it's moved to 63.5. And so everything. And so 18 cents a mile for charity, 14, I mean, for 18 cents a mile for medical and 14 cents a mile for charity. You're literally getting paid to drive, business owners. So I encourage you to take advantage of that. One of my favorite, I'm a father as well. So hire your kids, except for the business owners, they're not your child. We call them what they really are, contractors. You see, as a business owner, you have an ability to anybody 7 through 17 write off at least, and this is the great part, $12,950 per child. And so you see a mother of four and you tell her you have a $48,000 tax deduction, she's going to wonder how. And you let her know, just join my business and I can show you how. And so this is what the IRS requires. Just have a W-9 on file for the child, provide a 1099 of the income, and create a contract. And I tell all parents, write down the chores, write that 12,950 is the agreement, erase the word chores, and write job description. And it's just that simple, ladies and gentlemen. Sign it. That's the contract. Because as parents, you got to buy the uniforms, you got to buy the meals, and you got to pay for the lessons and activities. But how about you pay your child first and they buy their own uniforms? You pay your child first and they buy their own meals. I literally pay my daughter first and she pays for her own taekwondo. And so not only are we teaching financial responsibility at an early age, but I'm literally keeping more of the money that I have to spend anyway. It just makes sense, business owners. Take advantage of the laws written for you. Commingling is breaking the tax law, ladies and gentlemen, and many people are guilty without even knowing it. And what commingling is using your personal account for business purposes. You cannot do that. And so here are four things I suggest to prevent commingling. And that's simple. You want to purchase the business, get your DBA or assumed name, get an EIN for that business, and open up a business bank account. Just that simple. And then you want to start spending from that business account, not the personal account, on those items that you know are business tax deductible. And I like to call this the Trinity of business. You want to get your DBA. And a DBA is just doing business as the name of your business. You want to register it with your county courthouse. And once you obtain that, you want to go on irs.gov and get your EIN. That's your employment identification number. It's a 9-digit number, just like you have a 9-digit social. And then, of course, you want to get that business bank account with those two pieces of paper, because the bank will not open that account unless you have one and two. And you got to make sure that you're somewhere you can print, because they're only going to give you that EIN number once. So print that. Rule number one, business owners, pay yourself first. You know, I tell everybody either a 60-40 split, a 70-30 split, some type of split with you and your business. $100 comes in, $60 go to you, $40 stay in the business account. Pay yourself first, business owners. You have to, and pay taxes on that. Because right now, it's just an owner's draw, and there's no tax advantages for that. And so you definitely want to make sure that the taxes is covered. And then we'll owner's equity that info back. And what owner's equity does is allow you to deposit money into your business account from your personal account tax-free. And so you definitely want to make sure that you write that phrase down, owner's equity deposit. This is a great way to pay taxes. I want to suggest this. If you're earning income in your business, this is how your income should flow, in my opinion. Once you earn it, you want to make sure that you're taking it to the bank. And once we get it to the bank, we want to make sure we put it in a business account. We're going to pay ourselves first. We're going to pay the taxes owed. Rodney has a rule. We pay debt before we pay bills, because debt reports and bills don't. And so we pay debt before we pay bills. Then we pay our taxes, federal, state, city, whatever your structure is. And we can pay it in a federal deposit account quarterly if you're not structured as a sole proprietor only. And once we pay debt, then we start to spend on those business expenses that we know we can transition. And, you know, we learned earlier, rich thinkers buy assets, not liabilities, because those assets can be counted as liquid money. And those investments go right back to the business account. And liabilities, well, as business owners, we don't have liabilities. We transition those to tax deductions and we write those off in the name of business. And this is how I suggest if you're earning money as a business owner, this is how you should be flowing your money. And then writing everything off in the name of business at the end. And so one thing I want to stress, your monthly subscription. This is what separates your personal or your business, ladies and gentlemen. You have to remain active. You see, once you have your business purpose, your transportation day, those diversions, time spent on business is important. I want y'all to understand the IRS considers a business day 4 hours and 1 minute. Of the 24 hours, I think you can spend 4 hours and 1 minute in the name of business, and it doesn't have to be consecutive. And so make sure that you're getting your time spent on business and keep records of everything. Because I want you to understand, paying that monthly fee sometimes is business activity because you're open for business when you're not recording a profit. Sometimes we don't make money. And people think, well, I didn't make any money, so I can't put my business on my taxes. That's not true. And so, but if you're not active, you'll lose that entire month of tax deductions. And so I encourage all business owners to stay active all year long, especially for tax purposes and for your tax strategy. It's a great way. So your monthly subscription is one of your best tax strategies ever. And a lot of people would say, hey, Rodney, I heard that, but I didn't get any of that. My tax pro said I couldn't do that. I just didn't know about that. Well, we want you to know if you didn't get those, you can amend. We have up to 3 years to fix it. And so don't think that you did miss anything. And so, but if you haven't heard anything, ladies and gentlemen, please remember this. Documentation beats conversation every time. The IRS doesn't want to talk to me. They don't want to talk to you. They just want to see the proof. And so I encourage you to have your proof. 5 essential components of business I like to share with all owners: price, cost, time, expenses, and taxes. Most people don't consider taxes. When you make money, ladies and gentlemen, it's not free in this country. You do have to pay for making money. Expenses are operational expenses. Your time will become monetized. And cost is what you will spend over time, not the price that you pay for the product. And so this is what value really is. It's what a product or service does for you. And that's what I truly believe. A home-based business turns any price into a tax deduction. A home-based business turns any cost into a tax deduction. A home-based business turns time into a tax deduction. A home-based business turns everyday expenses into a tax deduction. But my favorite, a home-based business actually turns taxes into a tax deduction because you're not filing your taxes, your business is. And so this is why I truly believe a home-based business is value to you. And so you definitely want to make sure that you're taking advantage of this. And I want to leave you with 11 strategies to auto-proof your home office. And so we want you to understand proof of admin use. This is where you do all your financials. Look in your back office. Regular use, exclusive use. Don't rent if you're doing your business there. That is a totally different industry. So you want to make sure always go to earn income. When I say earn income, business owners receive a 1099 after $600 earned. So you always want to go for that 1099. Classifies repairs. This is your personal home. So you can't get a new deck put on and say it was in the name of business. And so we want you to classify repairs properly. Prove your expenses. Depreciate correctly. Make sure you're depreciating everything, especially equipment. Landscaping is a deduction. Your phone bill is one of the best ways to prove that you have a home office, and I mean a landline. And last but not least, ladies and gentlemen, document everything. This is the easiest way for the IRS to get on their radar. And so with that, ladies and gentlemen, I just want to say thank you for your time and attention. Here's the information to definitely reach out to us. Visit our website for all the information. If you're on Facebook, definitely go visit us on facebook.com/tax truth. We got years of information there for you. Give me a call or email. Either way, back to you, Sonny.
Man, I definitely appreciate that, sir. That was a bunch of information and very, very, very helpful. One of the biggest things that I took away is, the importance of staying active. And because that is a key. Like you said, you lose a whole month of deductions if you don't stay active. That's key. So we definitely want to make sure that we're staying active, we're documenting everything. And you know what, we do have a 9 o'clock call Eastern time that's happening, but what I'm going to do really quick is I'm going to stop the recording.